Today it's opening bell 9:30 a.m. Eastern Time on March 13th. Let's get started for the Pulver Report. We understand risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Whether you trade stocks, options, futures, forex, cryptos, you know the deal. Many questions out there probably popping up around Silicon Valley Bank, SVB. That was the big news from last week. We'll talk about that. Social media, youtube.com/Chris Pulver, trying to keep the handle consistent. Facebook.com/Real Chris Pulver. Instagram, Twitter, Real Chris Pulver. Let's go to the charts. This is the CME watch tool. A lot of stuff has changed. We had this really big switch last week. Now, this is the current Fed rate, 4.5 to 4.75. This is the same. This is now a 25 basis points hike. The 50 basis points hike looks like it's off the table. It's not this week, but it's next week. But we do have some news that the market will be digesting. We have, if we take a look, Tuesday this week, CPI for the U.S., that's going to be a big one. In addition to what's happening right now with the Fed potentially stepping in and looking at a little rescue package for SVB and other banks, FDIC insured. Is this the tip of the iceberg? Is this contagion? I think no. The more you read about SVB and the acts they took the last couple of years, especially, they really were poorly positioned. And a bailout is kind of sad because they were doing some pretty irresponsible things. But at the same time, this is to also help step in and prevent, a run on the banks and potentially a massive liquidity crunch. So anyway, I would just encourage you to read as much as you can about it, see what's going on. But again, we're gonna have to monitor the markets. Plus, we have the markets digesting CPI, like I said, on Tuesday morning. Year-over-year forecast is 6%. We had a slight trickle lower from 6.5 to 6.4. So what I'm watching this week is to see again, do we get to 6% or better? I think if the market is going to see anything happy or experience anything happy this week, we probably have to see 5.9 or lower. 6% is fine. That's as forecasted, but I think in the fives, 5.9, 5.8, carving out another half of 1% would be a good improvement for CPI. If we take a look at our instruments here, we're getting a lot of gaps to the downside. I had a lot of chart alarms going off. I can check those here. BKR, XOM, ASB, AA, SLB, AEO. These are all alerts going out this morning. Euro Swiss crossing down to some 97.50 flat areas. The JPY 10 years crossing some levels. DXY is crossing. So a lot of chart alarms to look at this morning. Dollars pulling back. Currency strength chart this morning. We had the JPY on top, the New Zealand, the Aussie, the Swiss right in the middle. Pound euro together, CAD dollar weaker. Volatility wise, a lot of movement to the upside on the yen. Getting another stronger push on the yen, 140. We take a look at our yen crosses. We're starting to get yen follow through on risk off. We had a big slide last week that's following through today. Here's CAD yen. I've been telling traders, if you're following these yen crosses, anything on the shorter time frames, 1 hour chart, look at your buy and sell zones. 30-minute, 15-minute, get those alignments, take some scalps. There's good volatility. I mean, this drop here from last week, CAD yen's down, 450 pips. Swiss yen's a tougher one because it's been safe haven, but everything else has been pretty much yen strength. Euro yen right here, 145 down to 141. There's another 400 pips. Pound yen volatility, but 164 to 160, another 400 pips. New Zealand yen straight down, 85 down to 82, 300 pips. Dollar yen, big drops there, and I'm going to double check and see if that was a gap. 137, nearly 138, all the way down to 132 and change. So we'll say 138 to 133. That's 500 pips. So like I said, a lot of movement, a lot of volatility short term on the yen crosses, which is what we've been looking for forex trading. As far as just taking advantage of it, let me get logged into YouTube here. Say hi to everybody. We are good. All right. We're live.
Forex.com, committed to helping.
All right. SHY going up, or actually SHY, yeah, that's bonds. So bonds going up. That's good for us. Chris, good morning. Brad, good morning. David, Donna, Jacob, Katrina, and good morning. Just Catherine. Nice to see everybody. Gail, Ranjit. What's happening? Morning, Jan. All right. Good morning, everybody. Happy Monday. There we go. So yeah, a lot of stuff going on. Here is the S&P. All right. So look, it's going to be a wild and crazy week, right? I mean, what I'm noticing since so Thursday, big sell off. It all started with this kind of, high, low, evening star, looking for some bearish follow through. We certainly had it. That was Thursday. That was Friday. That's today. I mean, we're getting probably statistically one of the larger and faster sell offs we've seen in a while. So let me do a quick measurement here. So just from last week, middle of the week to where we are now, the market's dropped about 6.5%. If we get down to these equal lows, that puts us around 7.7% within about 4 to 5 days of trading. So that's pretty aggressive. The volatility index has spiked up above 30 for the first time, I think, since 2020. Here's the VIX, 30.45. Nope, 2020. My fault. I guess we spent a lot of time in 2022 up above 30. Um, Again, this is going to be an interesting spot, right? If we come up here, spike above here to around 34, is that a spot to fade the VIX? Maybe, right? I mean, obviously, if it pushes higher, which it can, but it takes a lot, right? It takes a lot for this volatility index to get above 40. When you look back here, this was post 2020's crash, and 40 was tough to come by. This is a 2018 crash in this is a January February. Is that right? That seems like we should have had a bigger crash in December. Years are December 2018. Interesting. So anyway, this is something I'll be watching this week. Possibly some, bearish trades for a little bit of a reset on volatility, but this thing spikes very aggressively, and this is some good range trading opportunities in the near term. So we'll keep our eye on things. Catherine says you mentioned about the no Fed rate change. Yeah, so that was the first thing I looked at. That was what I was reading about overnight. Was there's looking like there's forming some type of I don't know if it's technically going to be called a bailout package, but some type of package to help keep liquidity afloat. And again, I don't know if bailing out SVB is the right answer, but this isn't going to be the first one, right? I mean, what's happening to SVB is probably going to happen to other banks from the standpoint of banks that took on a lot of tech clients that are sitting with bad books, that are sitting with over leveraged and unhedged positions. I mean, that's what I read over the weekend was SVB financially was positioned pretty poorly and not protected at all. And the whole point of being a bank is to have low risk, high liquidity, and they had neither. So anyway, that being said, this is the current rate for the Fed. We'll know more next week on the 22nd when the Fed officially has a rate increase, but it's expected now to be about an 80% chance that we'll still have a 25 basis points hike. Now, this all changed a lot last week. Last week, I think Tuesday, Wednesday, this was expecting a 50 basis points hike, and that was priced in with a high probability. And then it reverted back to by the end of the week, it reverted back to a 25 basis points hike. And here we are. And again, this is still subject to change, but here we are. There's no rate hike. Here's a 25 basis points hike. So it looks like we're still going to get a 25 basis points hike, but now I'm curious where we look at December, right? Because we raised in February. Let's say we raise again in March. What are we doing for May? Right now, May is expected to stay the same. June expected to stay the same. July, a cut potentially, right? If I'm just following the path here, the cut in July. By December, I mean, this changed so much, and here we are now. Like the market's just kind of calling the bluff of the Fed. So I'll say this: in order for all this to look good, as far as like if the Fed is going to pause and cut rates by the end of the year, in order for that to happen, there's probably going to have to be some big improvement in our inflation data. Or, like we talked about last week in the trading rooms, the Fed is going to have to redefine what's acceptable. I mean, if the Fed is dead set on 2%, it's going to be a long ways to get there for right now, especially if we're completely backpedaling on our current path, right? So again, it's kind of a wait and see. I know it's easy to overreact to things. Basically, as far as trading goes, there's good opportunity in the forex right now. This is why we trade a lot of options because we can ride both directions. Things selling off pretty nicely. I mean, Apple, I've got some bear call spreads at 160 that expire this week. The one I'm watching closely that I'll have to monitor is I've got some bull put spreads here on ExxonMobil. I'm going to look to see if one, with this gap getting filled, if we come down and find this 200 EMA and fill the gap this week, or we have some risk appetite to kind of balance the week out, if we come back and fill this gap, I'll probably close this out for a small profit. But otherwise, it's a lot of bear call spreads. Meta, bear call spread up here at 202. Apple all the way up to 160. Microsoft at 275. Tesla, I took full profit on last week at the 215 by 217. Coinbase, I've got a 75 by 78. We took a nice mix of profits last week on the Qs and the SPYs. So we've had some good income. Our bear call spreads, and what's going to be interesting is anything that we had, like the 400 by 401 last week, I closed out a 405 by 406. We have these ones as well. These are all out to May and June, but this is a pretty big level if we bounce. 381, 375. I'm looking for a bull put spread down there. I also have a 410 by 415 bear call spread. So just lots of little option stabs in the markets trying to generate some income. And I'll be watching ExxonMobil. I set that chart alarm right here in the gap at 107. So we're already starting to see some bullishness. If we look at the SPY, the SPY, if we come back and fill this gap. Now, I wouldn't be surprised based on the aggressive sell-off here the last couple of days. Let's say that we settle in here to around 380 to 375. We might have a little bit of a market recovery. There's a weekly pivot from this week that's available, right? Weekly pivot up here, but big inefficiencies and potential supply zones to the upside. So technically speaking, I see some support. We have a gap from today that we could fill from Friday's close to today's open. So if it's red and we bounce there Tuesday, Wednesday, maybe CPI data could pick it up. I mean, this was can't remember if this was a rate hike or a CPI news event. Doesn't really matter. But basically, I'm looking to see, does the market bounce in any way, shape, or form to kind of contain some of this aggressive selling. And if it does, then it's going to be a week where a lot of volatility happens. A lot of fear came out of last week into this week's trading to kick things off. Futures market's been down, but if there's a bit of a recovery, we'll have to watch. Friday's a long ways away at this point. Okay. So, but yes, things are changing, right? This stuff with SBV is changing. That's certainly altering the path that the Fed had. I think the market was pretty dead set on multiple rate hikes and no pause. Or I'm sorry, multiple rate hikes, a pause, and no cuts. And then the market went from still having rate hikes, a pause, and a cut. Now the market's going to backpedal and cutting way sooner. So I don't know. I guess out of necessity, it's like the Fed is clearly changing rates aggressively, and it's wreaking havoc in the market right now. So that is that. Let's go into some currencies. The Swiss franc and the Swiss basket's been pretty strong. We had a huge sell-off last week. This is Aussie Swiss. I am still holding long on Aussie Swiss. I was able to get a fill at this equal low. Now I'm just going to wait for a trendline break. 6,000, I had a pending order. Let me see if that got filled. So that low was around 60.26. I will check and see. Get logged in MT4 and find out. So we'll find out. But I had pending orders there, just small levels. And now I'm going to be looking for something like this to confirm. Okay, now really quickly, I'll just talk about this in the higher time frames. If I look at the Aussie Swiss, this is essentially the lowest it's been. Okay, we have this massive pocket right here and this big demand zone right around 6,000. I could see this being a decent level for a move back up and range highs, especially if we all of a sudden go into an accommodative Fed. I mean, that might change things very quickly. We might go, again, what's going to be interesting is maybe it's not just the US, right? Let's say that we have this bell curve of hawkish versus dovish. The Fed was one of the more hawkish banks from at least the commentary. They also were raising rates and the market was expecting more rate hikes this year. Well, if all of a sudden the Fed starts to backpedal, does that mean the ECB backpedals? Does that mean the Bank of England backpedals? Does that mean other banks start to do the same thing and start to not raise rates as aggressively as they've been talking about? Does this whole concept of, number one priority and number one public enemy is inflation, does all that change right now? Because there's a liquidity issue, because there's, potentially banking problems. So again, I'm not saying SVB is contagion, but I think that it's going to at least force the market to kind of, digest what's important. And the Fed is possibly looking to pivot and change a few things. So anyway, I still again, if I'm just trading the Swiss pairs, This is my outlook. I'm buying in here, I'm buying in here, and I'm essentially an investor in the Aussie Swiss. You know, I mean, whether that's going to take 6 months, 12 months, I don't know. But the way it sold off aggressively here, looking back at this high, I'm essentially waiting to see, where do I find a bullish pattern? If I find a bullish pattern here, great. If I find a bullish pattern here, great. I'll wait. I'll hold. I'm trading small enough that I can take a 6,000 down to 5,400. It's going to be a stubborn ride, but I'm going to do it. CAD Swiss, this one's already down to equal lows from 2020, so I'm buying it. Okay, we got filled. We had, and again, this is an order that I did. I talked about in my trading room, set it up in my newsletter. 68, 67, 66. My profit target. We can look at a couple things. This thing dropped off a cliff last week or so. If we hold this level, we have a pivot. We have pockets like crazy, past support. I'll look, and again, I'm not calling the bottom. If this has to sell off and pause and sell off a little bit more, then I'll just wait and see where I can carve out something below this, 65 area. But once we start getting back on the right side of this trend line, I'm still looking for this move in that pocket in this supply zone, right? So I have bigger pictures or bigger targets set out in the distance, and where we are historical lows. So I'm not saying this has to be the low, but I'm saying that low should matter in some way, shape, or form in the near future. So if this is a really technical solid low, that's great. We bounce off here, reverse, and go back up. But if we go a little bit lower, I'm just looking for this thing to base, carve out some lows, and then start reversing where there are no more sellers and it's just buyers come back. Okay, but willing to hang on to CAD Swiss. I did get a couple extra entries there. Euro Swiss, this one is reset as well. Okay. Yeah, CPI coming on Tuesday, 8:30. Yep, correct. So here's our Euro Swiss, a big drop, and we'd already talked about this in the trading room. If this is in fact a low right here, if this is a low to high pullback, this could be an A to B, this equal low right here. We could be still forming a C if this is a double bottom. If it is, again, that's like calling a bottom on a falling knife is a pretty risky thing. So it may not be, right? But if this is going to consolidate in any way, shape, or form, this could still be a low high swing. This is all corrective, and then the market's still looking to go up here. Still a pocket, still this area, still this high, still this pivot, still all the supply levels. And again, maybe it's going to be falling here, double bottom, then it stalls, then it comes back up. And here's your low, and here's your high. Maybe it's a range. Maybe my yellow box is a little bit too high up there. But if I can still position to buy low and get this thing back to equal highs, I can still make profit. So, I'm still holding the course on these Swiss pairs. Dollar Swiss, I'll still hold dollar Swiss. I know it dropped a lot. That's okay. I'm still going to scale back into it. This one I'm willing to take all the way back down to these lows here around 87.50. I mean, and again, that's also, well, it's an odd spot, right? I mean, if we came all the way back down to this level, I mean, I suppose it could be breaking here, pulling back, it gets faded back down, but 87, 8,800, I'm very interested in buying. We still have a yearly pivot, and this is a massive level of support, massive level of resistance. So that's a low, that's a high. This is like a 10-year range on the dollar Swiss. So I'm going to stick to it. Stick to my analysis, stick to my levels, take some positive carry. Look at the big multi-level lows. Like this is our low back here in 2021. Here's our flash crash from 2015. Unless the Swiss National Bank starts to raise rates to, I don't know, 5%, I still think that the positive swap is a good thing. At least that's what I'm still getting it every day. So anyway, that's my Swiss franc stuff. And talked about this too. The Swiss National Bank is kind of notorious for these sneaky, stealthy interventions. They may not explicitly do anything. There is a rate decision for the Swiss National Bank on Thursday, the 23rd. So that's the day after the Fed. I don't think they're really going to pivot necessarily. They might even raise rates by 25 to 50 basis points. But that doesn't matter. I've seen the Swiss raise rates and the currency get super weak. I've seen them cut rates and the currency get super strong. I've seen them just do nothing in the market. I mean, it's like they have a really great way of like intervening and manipulating, like a lot of central banks do, but they kind of do it in the background. So we will see. But I think it's going to be an interesting storyline to watch this year for currency trading is what the Swiss basket's doing. simply because the technicals are really solid. I mean, technically speaking, I think the Swiss basket's a great trade to be short on. I'm looking for Swiss weakness across the board over the next couple of years. But that's the problem is how long does it take? I mean, I'm willing to hold. Some traders aren't. Some traders don't have that type of horizon. You know. So anyway, that's that. Um, so we've got a lot of expirations this week. I know that. I know I do at least. If I go to 317 expirations, this is split between a few accounts, but 129 expirations to watch. So Apple, I have some staggered bear call spreads. Airbnb, let's see, Airbnb, that's one. That should be fine. That should be full profit. We're trading at 116. Yeah, I have a 90 by 85. That'll be full profit. I don't need to close that one out. That's good by me. Let's see. This is a split that we did last week. This is 75-71. We have an 85 by 90 and a 65 by 60. That's a nice little iron condor. So we're bearish up here. We're bullish up here. Price stays in the middle. We collect full profit. That trade's going to work out pretty nicely this week. So anyway, a lot of expirations to manage in equities on demand, and we will do our best. The one that I'm going to be watching closest is probably the SPY. I have a 375 bull put spread that I'll be watching, and XOM, I have the 105 and the 104 bull put spread. I'm watching those because we might come down and actually tap some levels here. That's a 200 EMA. But if we sell off aggressively, plus we have a gap, that gap's all the way back to 107. So if we get to 107, I'll put an alert here at 106 as well. I might close these early if I can. Okay, so those are the two I'll be watching, and then everything else is looking pretty good because we've taken some bear steps in the market. Forex-wise, going to be a lot of volatility. Stick with those short-term crosses on the yen pairs. Having a bit of a reset on the Swiss franc as it's been so strong the last week or so. The dollar, still looking for a pullback here in the dollar. And again, this is what we expected, right? I was looking for a pullback on the dollar and then a push back up into this monthly pivot and pocket. So all this could still be working out nicely technically, and I'm going to keep a close eye on all that. Dollar Singapore, it's a pair that we've been talking about quite a bit. I'm still long in this one, and this one's looking good for profit into the yearly pivot and this larger pocket as well. So a rally here, a pullback. I'm still looking for higher lows and then a push back up there. So A, B, C, D, or just a wave 1, 2, wave 3, and protect some profit on dollar Sing. So we should be okay for not a bunch of wild and crazy stuff. Right now you're already looking at the market filling the gap here. If this level holds, this could be a big nothing week. All this selling off and all this scariness last week, but the VIX spikes up to 30, then the VIX gets smashed back down. The Fed steps back in. The Fed's looking to pause, maybe not even raise rates next week. If that's the case, the market might take that as a pretty good cue. The CPI data on Tuesday might not even matter as much. It might be all eyes on the Fed for next week. If that's the case, the market prices possibly a little saving grace and a rally to come back up, and we're sitting neutral, right? If we're sitting here, let's say the market's right in the middle by next week. So let's say CPI data comes in better than expected, the market's right in the middle. That would kind of line up perfectly for next week to show indecision, right? Market's right here. There's not a breakout. You're just dealing with all this slop in the middle. It's very possible. Okay. MNQ. Sure. MNQ. Is that the right ticker? Yep. So essentially you're looking at the NASDAQ, right? Yeah. I mean, the NASDAQ is probably the more vulnerable index in my opinion. I think that right now the two levels that I'm watching, I know this is larger time frame stuff, but this high to this low, I do think that the market is going to stay stuck between these levels. So right now it's like the bears are clearly showing some signs of momentum to the downside as of last week's sell-offs. It's going to be really important. I'd say for the bears to continue, the bears would have to close out below this monthly pivot. Now again, this is using the NASDAQ. But if the bears close below that monthly pivot, I could see this momentum continuing, and we start retesting these lows around 11,000. Again, that's the NQ. Okay, so if I go to your chart, the MNQ right here, I'll look at the same thing. So we're at that monthly pivot. I think for this week, it's going to be important. This is a February pivot, not March. We already hit March's pivot. But if we close below this pivot here, then I would be looking at this low and this high, right? Because initially this was a big channel to the downside, and the bulls got a little excited, but that was faded. That was a bull trap. And now the bears, are they willing to close and continue to go lower? Here's what I'll say. It's really going to come back to interest rates and earnings. Tech companies, Nasdaq, right? Um, not going to do well in a high interest rate environment. But if the Fed is all of a sudden pausing, if the Fed is going to cut rates, guess what? That might change the outlook a little bit. So I'm really cautious on everything, right? I'm not trying to pick a ton of directions and making big claims or big predictions. I'm essentially saying, look, this area could be, high to low, lower high to lower low, hit some support, bounce back up here, be sloppy, tough to break the highs, tough to break the lows. A lot of inside crap trading right now. Week to week, it's a lot of volatility. So just be careful and make sure that, look, a lot of what I'm doing as far as my trading goes, if you're trading a lot of futures, I would be hedged, honestly. I try to be hedged and ride my winners longer than my losers, and that way, if I lose one, win one, I walk away profitable. That's a better deal to me than trying to be, always playing a direction right now, because the market is going to be stuck. So I just think it's going to be tough trading. First half of the year is probably going to be very difficult. We have a lot to digest. We had an entire Fed and rate cycle to digest. We've had now we have everything changing with the Fed stepping up and some reworking of liquidity. Essentially, they're changing the interest rate policy. How important is CPI this week? We don't know. All this stuff is up in the air right now. So that's all I'm saying. Hedge. Be protected on both sides. I think that's going to be really important. Okay. All right, let's take a quick look at oil, gold, silver, and then I'll wrap up. Oil trading at 74. Again, pretty interesting week. Do we have support on oil and a pushback up to the highs? If so, we'll find out. Gold and silver might be tipping upwards because the dollar's pulling back. So here's gold. Yep, big jump on gold. Again, is that not? Again, the dollar doesn't look like this, right? Dollar isn't getting that weak, but gold has jumped quite a bit. Probably just on like the quick, a bank's running flat, so it's like the quick risk off trade, which honestly didn't get a lot of love. We had some movement here in 2022, but you talk about 2022 with risk off. How did gold just get reset so badly? 2022 stood off the entire year, right? This is all the 2022 gold got weaker because the dollar got stronger. So a lot of broken correlations right now. But still, take a look at the higher time frame on gold. Is this midpoint a good trade to buy? Maybe. It also could just be high, low, pullback, and still go lower. I think selling gold up here makes sense. If I get a chance to buy it low, of course I want to buy gold low. But in the middle, it's like it's been messy. I'm not going to buy it there. So anyway, we'll find out. Silver, also a nice little jump. This should be helping our SLVs. We have some credit spreads on SLVs. 1974, we have an 18 by 1750 out for a couple more months. So anyway, and then crypto, not so hot. Big pullbacks on Bitcoin. We're trading at 22.5. Where do we bounce off? Exactly where I said. I said if we get a bounce off 20K, look to buy. Anyway, scoop up some Bitcoin at 20K. I had a nice little limit buy filled at 20. So I got filled at 20, up a little bit on that, and we're going to see if we can run after that yearly pivot. So that was good. Good technical stuff. Pulled back, and hopefully we base there. There could be a little bit deeper, but we'll find out, right? If this is a left tip, center tip, right tip, we might still fall and pull back into these pockets, but at the same time, you're also staring a bullish pattern in the face right here. Left tip, center tip. So I said 20K is a good buying opportunity. Area 1, we pull back into this flat. Area 2, and just look for a double bottom. But if that's all the market needed to lift off and run, great. Buy it at 20K, would go up to 27. And Ethereum, we should have been looking for support around 1300. There was a dip around 1370. So I said this. I literally said this on my newsletter last week at 1400. Look for a buying opportunity on Ethereum at 14. Pretty good. So technically pretty efficient, pretty obedient. That's always good when you're trading. All right, traders. I got to run. I got class 10 o'clock. Equities on demand. I'll see you then. Yeah, thanks, Don. Feel better. Yeah, everything's good. Okay. If you would do me a favor before you go, click that thumbs up button for me, like and subscribe, all the good stuff. We'll be back on Friday for a weekly wrap up. And like I said, CPI data this week. We have the ECB rate decision on Thursday. That's coming out Thursday morning with Lagarde. They're looking to raise rates by 50 basis points. So we'll see if that happens. Most likely it will. They're probably going to get up to potentially 4% this year with two additional hikes. sentiment on Friday morning. But again, the big week is how does the market digest Tuesday CPI data? What happens with gap filling since we sold off 6+% in the SPY? And all eyes on the Fed. And again, it's so annoying, but it's the truth. It's what we need to pay attention to. So right now the market's looking for a rate hike next week, but only by 25 points. And what they say, what the Fed statement is at the press conference and the statement is going to be really important next week. So that being said, Wednesday 2 p.m. on the 22nd, I will have a bonus FOMC session. We'll just trade it here on the YouTube channel, but that'll be next week, right? Flex trading room, see you this week. Equities on demand, see you this week. Let's get started. I'll switch over into the trading room. All right, buddy. Thanks a lot. See you this week in the trading rooms. All right, let's have a good week. Bye.